Hey guys, today I want to share with you my $57,000 dividend portfolio that I've named the Fire Fund. I recently started a series called Fire Fund Fridays where I post weekly updates on stock purchases I've made in this account. But in this video, I'm going to reveal every stock I have in the portfolio, how much I own, and how much passive income it provides. On this channel, I talk about all things finance, wealth building, and how you can achieve the life of your dreams through financial independence. If you want to join me on this journey to financial independence, go ahead and hit that subscribe button. The reason I started this account was to generate passive income for early retirement. The current goal is $12,000 per year or $1,000 a month in dividend income. Here, you can see the current dividend income is about $100 a month. All dividends received in this portfolio get reinvested to help the dividend snowball. Alright, let's check out this portfolio. The portfolio is currently valued at $57,087. The dividend yield is 2.57%, which is $1,468 a year. The actual dividend yield is a bit higher because I have some stock in this fund that does not produce any dividend income. Starting things off is one of the largest holdings in my portfolio, DIV, a monthly paying high dividend ETF. This ETF contains 50 of the highest dividend yielding companies in the United States. Historically, this stock trades around $23 a share, and I have been dollar cost averaging since $17 per share. This is such a large portion of my portfolio that when the monthly income generated is enough to purchase 2 shares on its own, I will stop actively investing in it. Another large holding I have in this fund is SPHD. This ETF contains the highest dividend paying companies in the S&P 500. I like this ETF because it contains blue chip companies that I can trust and offers some growth potential. But I do not actively invest in this position anymore. I just reinvest the dividends and let it grow on its own. This next stock is a REIT ETF. A REIT is a real estate investment trust. They focus on real estate holdings in their portfolio and are required by law to pay out over 90% of their earnings in dividends. I spoke about this ETF in the Fire Fund Friday series, so make sure you check out that video. This ETF contains REITs from around the world and pays a nice dividend for its low share price. I currently own 357 shares, and like DIV, I will stop actively purchasing shares within the next few months when the monthly income is enough to purchase 2 shares on its own. Those are my only triple-digit dividend income sources that I will probably stop investing in soon, since I plan on diversifying this fund, and they already occupy a large portion of the portfolio. I will just let the dividends reinvest and snowball on their own. Moving on to the more dividend growth-oriented investments, starting things off is Starbucks. I started buying Starbucks years ago, and it's an investment that has paid off. The dividend yield of 1.52% is not very impressive, but the growth this stock has seen more than makes up for it. I honestly believe people will never stop drinking coffee, so I see it as a great long-term investment. It is a fair percentage of my portfolio, so I just leave it alone and let it grow. Next, I have another ETF here, but it's one of Vanguard's. I actually own several Vanguard funds in this account. This one is VYM, a fund made up of higher dividend yield companies, rather than growth companies. I stopped investing in this fund earlier this year because I felt that there were different options at better prices that offered a better dividend yield. Moving on, a nice dividend growth company that recently announced a dividend increase is JP Morgan Chase. This stock has appreciated quite nicely in my portfolio. I might pick up a few more shares to round out its position in the portfolio if I ever see a large price dip. Otherwise, this stock just sits and I reinvest all dividends. Next, we have a new addition to a portfolio, Horizon Technology Finance Corporation. This is an investment management company with an impressive dividend yield of almost 7%. I currently own 39 shares, but I will definitely be adding to this position as I feel $17 a share for a 7% yield is an excellent value. Next, I have another Vanguard ETF. This one is VOOG. This ETF contains more of the aggressive growth stocks within the S&P 500. I purchase one share of this growth ETF every Monday. Even though this is a dividend portfolio, I do feel that it is important to have some aggressive growth stocks in here as well. I will continue buying one share per week regardless of market conditions. Here's a name I'm sure everyone's heard of, Coca-Cola, one of Warren Buffett's favorite dividend stocks. This stock has not grown for me much, so I've left it alone, not buying more, just reinvesting all dividends, and letting it compound on its own. Moving on, we have what used to be a favorite among dividend investors, a 7% dividend yield. But the company has not been doing so well over the last few years, and they are supposed to have a dividend cut. I have a relatively small position of just 18 shares. I won't be selling any positions unless they cut the dividend altogether, but I won't be buying any more. Here we have a staple for dividend growth investors, Apple. As you can see, my investment in this company has paid off big time. This company is extremely innovative and one of the more growth-oriented positions in my portfolio. They pay a small dividend, and I just reinvest all back into the company. Below that, we have ExxonMobil. I am down a bit on this position, but Exxon has a generous 6% dividend yield. So I do plan on dollar cost averaging my position down and buy more until ExxonMobil is about 1% of my portfolio. Another stock in the energy sector is OKE, which is actually in the S&P 500 as well. They also have an amazing 7% dividend yield. This is another stock that I plan on buying more of until this is also about 1% of my portfolio. Here we have another Vanguard fund. This is the regular S&P 500 index fund offered by Vanguard. I bought this one a while ago when I was still trying to figure out what portfolio I wanted to build. I only have 4 shares because it is very expensive at almost $400 a share. I stopped buying this altogether when I found VOOG, which is almost the same as VOO, but is $140 cheaper per share and contains a higher percentage of aggressive growth stocks. Below that, we have JP Morgan's Income ETF that was recently introduced to the market. I picked up 4 shares just to check it out. It has a pretty nice dividend yield of 7.4%, but again, for the price of $60 per share, I felt it was better off buying a larger quantity of lower priced high dividend funds. Here's another fund I was testing when the Fire Fund was just starting out. One of Schwab's dividend ETFs. It offers a fair dividend, but did not perform as well as I wanted as an equity ETF, so I just let it sit at 7 shares and reinvest the dividends. Below, I have a brand new addition to the Fire Fund that I see a lot of potential in. It's a REIT, Vici Properties. They specialize in casino and entertainment properties. They did exceptionally well during the pandemic, and as the travel and entertainment industries open back up, I expect them to be a great investment. They are relatively low priced, around $31 per share with a 4.2% dividend yield. I will definitely be dollar cost averaging into this position for the foreseeable future. Next up, we have a dividend aristocrat, Lowe's. This is one of the pricier dividend growth stocks, but it has been dipped down from its May and June highs. I think that this is a wonderful company with excellent long-term growth potential, so I will slowly add to this position. Below that, we have Nike, another growth company that I have seen excellent returns on. Like Starbucks and Apple, it has appreciated nicely in this portfolio, but does not offer much in terms of dividends, so I just leave it alone and let the dividends compound. Moving on to another Vanguard dividend ETF I was testing out, we have VIG. Like some of the other ones I tested, there were just better options for a lower price, so I just have 4 shares that I leave alone. Next, we have a personal favorite of mine, Microsoft. This stock has grown exponentially over the last 2 years, more than doubling my initial investment. I have a separate portfolio where I buy Microsoft stock since it doesn't do much in terms of dividends. Still, I believe Microsoft is a solid choice for anyone that wants a safe dividend growth stock. Alright, now we're down to the section of single-digit dividend positions. Starting with PetMed, another new addition to this portfolio. They have a solid 4% dividend with a stock price under $30, which I would consider a good deal. There have been some short squeezes on this stock recently, so if that happens, it gives me an opportunity to exit this position with a low profit. I will buy more of this stock until it represents about 0.5% of my total portfolio. We have reached the bottom of the portfolio now. These stocks are all either received from referral bonuses or purchased before the fire fund was given a purpose, so they pretty much just sit in the account. But there are 2 stocks here that I recently started a small position in that I would like to talk about. The first is Algonquin Power and Utilities. It is another new addition to the fire fund. This company has big plans in the renewable energy sector, and it's a relatively cheap energy stock with 4.4% dividend yield. I will definitely be picking up more shares until it occupies about 1% of my portfolio. The other new stock is Fidelity National Financial. This is the largest title company in the United States. Even with the booming housing market, which means increased business for this company, it appears undervalued. I may slowly build up my position in this company as a long-term investment. Alright, that was the walkthrough of my dividend portfolio. I want to say thanks for watching the first episode of this new series. I will be posting monthly updates on this portfolio and new videos every week. So please hit that like and subscribe button if you want to follow along on this journey. Feel free to comment below if you have any questions about my portfolio. And thank you for watching. I'll see you guys on the next one.